Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, Market Watch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to podcast episode 32, published on May 22nd, titled Pandemic's ESG Stock Market Leaders, and presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing news, commentary, information, and resources. Remember that you can find a full transcript, links to content including stock symbols, and bonus material at this episode's podcast page located at investingforthesoul.com/podcasts. And Google any terms that are unfamiliar to you. Hey, the ESG analysts are back. A few days of up markets have brought them to life. So let's rip. We start with an article from InvestorPlace written by Todd Schreiber, an old friend of these podcasts, and it's titled 5 of the Best Socially Responsible ETFs to Buy. I'm going to quote Mr. Schreiber stating the name of the ETF, followed by a quote for each one. One is Xtracker's MSCI USA ESG Leaders Equity ETF. Expense ratio of 0.1% per year. The Xtracker's MSCI USA ESG Leaders Equity ETF is one of the true success stories in the socially responsible ETF space. At just over a year old, it has $1.65 billion in assets under management. 2 is Xtracker's S&P 500 ESG ETF. Expense ratio 0.11% per year. The Xtracker's S&P 500 ESG ETF is the one ESG ETF that follows the S&P 500 ESG Index, the ESG offshoot of the famed domestic equity benchmark. 3. Nuveen ESG Small Cap ETF. Expense ratio 0.4%. It's home to $227 million in assets under management. The Nuveen ESG Small Cap ETF is the biggest ESG Small Cap ETF on the market. 4 is iShares ESG MSCI USA Leaders ETF. Expense ratio 0.1% per year. The iShares ESG MSCI USA Leaders ETF is the iShares rival to the aforementioned Xtracker's MSCI USA ESG Leaders Equity ETF, as both funds follow the MSCI USA ESG Leaders Index. You got all that? Okay. 5 is iShares MSCI KLD 400 Social ETF with an expense ratio of 0.25% per year. The iShares MSCI KLD 400 Social ETF turns 14 years old later this year, making it one of the oldest funds in the socially responsible ETF category. End quotes. In these days of COVID-19, most of you have heard about the great success of Singapore in subduing the pandemic there. And it's done that without having to shut down its economy. Hence, its businesses are likely to generally show better results than in most other countries. So it could be a place where some of you might consider investing. If that's you, have a look at this article in Singapore Business titled Top 5 ESG Stocks Outpaced the STI's Blue Chips. Another analyst who I like to quote is Tim Nash. Writing again for Corporate Knights, he has penned a post titled Pandemic Portfolio, 2 Stocks to Watch as COVID-19 Drags On. The 2 stocks are McCormick and Company and Northland Power. Regarding McCormick, Mr. Nash says that, with restaurants closed, home chefs are having their moment. McCormick and Company is a spice and flavor manufacturer that sells a wide array of spices, condiments, and sauces. Its environmental, social, and governance ESG scores from the Corporate Knights research arm, as well as MSCI and Sustainalytics, are among the best in its sector. End quote. Concerning Northland Power, Mr. Nash writes that renewable energy utilities are in the enviable position of having consistent cash flows, since they have long-term purchase price agreements that set a fixed price on the electricity they generate. Northland Power, headquartered in Toronto, is one such utility. The company's cash flows shouldn't suffer if the pandemic's stay-at-home orders persist. The stock is expected to pay a 3.91% annual dividend. End quote. Mr. Nash produces a useful scorecard on the companies that you can review in his article. Now I have 2 articles that offer their perspectives on renewable energy. They both appear on the Motley Fool site and have the same contributors. A few of the companies appear in both articles. The authors are Travis Hoyam, Tyler Crow, Jason Hall, Matthew DeLallo, and John Bromos. The first article is titled 5 Renewable Energy Stocks to Buy Right Now. Since I've covered these companies, often many times in this podcast, I'm just going to mention the company names. You can go to the article's link on my podcast page for greater detail on these analysts' current thoughts on these companies' stocks. The companies are Ormat Technologies, Vivint Solar, Brookfield Renewable Partners, SunPower, and Atlantica Yield. The second article is titled Looking at Oil Stocks, 5 Renewable Energy Stocks that are Better Buys Right Now. As previously, I'm just going to mention their names and you can follow the link on this podcast page. The companies recommended are First Solar, Brookfield Renewable Partners, Clearway Energy, Next Era Energy, and again Vivint Solar. The site ccmarkets.com has a post titled The 7 Top ESG ETFs for Ethical Investing. I'll give their names followed by a short description of each one from the post. Incidentally, 2 of them were previously recommended in this podcast. 1. The biggest, iShares MSCI KLD 400 Social ETF. With over $1.7 billion in net assets, this is the largest fund in the category. It steers clear of companies that make money from alcohol, tobacco, or firearms. 2. Europe's best performer. The iShares MSCI Europe SRI UCITS ETF. The iShares MSCI Europe SRI UCITS ETF topped Just ETF's list of best performing ESG ETFs for the 12 months up to the 30th of April 2020. The fund screens out companies with exposure to fossil fuels through extraction and other activities. 3. For U.S. stocks, the iShares ESG MSCI USA Leaders ETF. Started in June 2019, this fund tracks U.S. large and medium caps and was up 21.7% since inception at the beginning of February. 4. The emerging markets iShares ESG MSCI EM Leaders ETF. The iShares ESG MSCI EM Leaders ETF might be less than 6 months old, but it's already seen huge inflows of cash, with Finnish pension provider Marion pumping $650 million into the fund. A good sign, as Marion has a track record backing high-performing ESG ETFs. 5. For gender diversity, the SPDR SPDR SSGA Gender Diversity Index ETF. This gender diversity fund tracks the 1,000 major companies in the U.S., looking at the ratio of men and women in senior positions. Of those, it invests in only the top 10%. 6. For low emissions, the iShares MSCI ACWI Low Carbon Target ETF. One for the environmentally minded. This fund filters companies based on their greenhouse emissions. And 7. For clean energy, the iShares Global Clean Energy ETF. The iShares Global Clean Energy ETF gives investors access to the clean energy sector, including wind power, solar power, and renewable energy. The fund has a global outlook. End quotes. The article itself has more detail on each of these ETFs. To read it, you'll have to subscribe to the site, but that's free. Again, the link to the article is on this podcast's web page. Zacks has produced another research report titled ESG Stocks Remain Resilient to Virus Slumps. 5 top picks. Here are the 5 stocks. Quote, 1 is Eli Lilly and Company, discovers, develops, manufactures and markets pharmaceutical products. The company's expected earnings growth rate for the current year is 12.8%, compared with the Zacks large cap pharmaceuticals industry projected earnings growth of 7.1%. 2 is Microsoft Corporation, develops, licenses and supports software, services, devices and solutions. The company's expected earnings growth rate for the current year is 19.8% against the Zacks computer software industry projected earnings decline of 4.9%. 3 is NVIDIA Corporation, operates as a visual computing company. The company's expected earnings growth rate for the current year is 28.7% against the Zacks Semiconductor General Industries projected earnings decline of 21%. 4th is Dexcom Inc. Designs, develops and commercializes continuous glucose monitoring systems. The company's expected earnings growth rate for the current year is 21.2%, compared with the Zacks medical instrument industry's projected earnings growth rate of 6.8%. And 5. Adobe Inc. operates as a diversified software company. Its expected earnings growth rate for the current year is 24.4%, against the Zacks computer software industry projected earnings decline of 4.9%. End quotes. Well, these are my top news stories and tips for this podcast. Pandemics, ESG Stock Market Leaders. And to get all the links, stock symbols and more, or to read the transcript of this podcast and with additional information too, please go to investingforthesoul.com/podcast and scroll down to this episode. Also, be sure to click the like and subscribe buttons in iTunes, Apple Podcasts, or wherever you download or listen to this podcast. And please click the share buttons to share this podcast with your friends and family. That way, you can help promote not only this podcast, but ethical and sustainable investing globally. So let's help create a better world with our investments. Contact me if you have any questions. Stay well and healthy and prosperous. Thank you for listening. Talk to you again on June 5th. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon, and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.